Europe's fiscal crisis, current status and risk assessment. The British Chancellor's recent admission of a massive fiscal gap, requiring further tax increases, sent shockwaves through global financial markets like a stone thrown into calm waters. The pound immediately dropped 1% against the dollar, while UK 30-year government bond yields soared to an alarming 5.7% and 10-year yields rose to 4.8%. This event not only exposed Britain's own fiscal predicament, but also revealed the systemic risks facing the entire European continent. Alarming fiscal realities. The fiscal condition of major European countries can be described as precarious at best. Both the UK and France have seen their fiscal deficits surge above 5% of GDP, far exceeding the 3% warning threshold set by the EU's Stability and Growth Pact. More alarmingly, the debt-to-GDP ratios of the UK, France, and Italy have all breached the 100% mark, approaching or exceeding historically dangerous levels. Amid this fiscal wasteland, Germany stands like a solitary island, having largely maintained fiscal discipline and serving as the last pillar preventing the Eurozone economy from complete collapse. However, even this model student faces unprecedented pressures. Defense spending, an inescapable constraint. The room for European nations to tighten their belts is rapidly shrinking, with defense spending emerging as the primary constraint. European countries have long maintained defense expenditures that are more than 1 percentage point of GDP below those of the United States, with Germany and Italy failing to meet even NATO's 2% benchmark. At the 2025 Hague NATO Summit, the US imposed even more stringent requirements. Other NATO members must increase their security-related spending to 5% of GDP by 2035. This demand adds insult to injury for Europe. Even Germany, with its relatively sound fiscal position, would see its fiscal deficit skyrocket to 4.3% of GDP if it raised defense spending to the US demanded 3.5%, with national debt potentially rising to around 80% of GDP within years. For Italy and France, already teetering on the brink of crisis, this requirement is virtually impossible to meet. This predicament reveals a harsh reality. Europe's long-enjoyed tranquility has been built upon American military protection, yet even under this umbrella, European nations have pushed themselves to the edge of fiscal bankruptcy. Structural growth challenges. Even more severe than the fiscal numbers are Europe's structural problems. First is the demographic crisis, with European countries universally facing the dual challenges of aging populations and declining birth rates, fundamentally undermining their economic growth potential. Second is the comprehensive lag in technological innovation capabilities. In critical fields such as artificial intelligence, renewable energy, and biotechnology, Europe not only trails far behind the United States, but has been overtaken by China and India in certain areas. Economic growth without technological innovation is destined to be unsustainable. Most critically, European countries have widely adopted anti-growth policy orientations. Excessive environmental restrictions, heavy tax burdens and regulations, and conservative attitudes toward emerging industries all constrain the release of economic vitality. Over the past decade, economic growth has not even been a primary policy concern for most European countries. Risk outlook, a triple bind. Looking ahead, Europe may find itself trapped in an unprecedented triple bind: no security, no growth, and no money to spend. On the security front, if the US reduces its military protection of Europe, European nations will be forced to dramatically increase defense spending, further deteriorating their already fragile fiscal positions. On growth, the lack of innovation momentum and anti-growth policy environments trap European economies in long-term stagnation. Fiscally, high debt levels and persistent deficits severely limit countries' policy flexibility. There's an old saying in financial markets: when everyone knows you're bankrupt, you're bankrupt. For current-day Britain and parts of Europe, this scenario appears to be materializing. Once market confidence is lost, it will trigger larger-scale capital outflows and debt crises, leaving all of Europe facing systemic financial risks. Europe stands at a historical crossroads. How it balances fiscal constraints, security needs, and economic growth will determine its future destiny.